Hey, what's up, guys? Welcome back to Way Up Trading, where we dive deep into the world of options trading and technical analysis. So if you're new here, my name is Will Homer, and I started this channel to share some knowledge with some fellow traders and some new traders who are looking to take their skills to the next level. So we cover everything from beginner level concepts all the way up to more advanced trading techniques. Now, everything is all being done with the goal of having your outcome be more income in 2023. So if you like this type of content, be sure to hit the subscribe button, hit that notification bell so you get more videos like this in the future. With that being said, let's hop right into the video. Huge reaction off of the PCE data that came in today. Markets reacted really positively and made a huge move to the upside. Had an awesome day today. Had a couple plays called out today on Twitter. Actually, all wind up going well over 100 to 150% plus. Had GE, also had PayPal, as well as a SPY, 0 DTEs on Fridays. We try to take advantage of those when they come up, and today wound up being a great, huge success. We're going to take a look at the charts and go over them real fast to see how they played out. All right, we got the SPY pulled up here. We're going to take a look and see how the action went today. Starting off this morning, we got the information on PCE that wind up taking the SPY from where it started off. The close yesterday was roughly around 412.63. You see, we had a little bit of a sell-off after hours. We had a huge initial run from Amazon earnings, which wound up playing out really well at first and wound up actually going the other way, tanking down the market and pulling it down with it at after hours. Slight gap down prior to market open. Then we have the information on PCE that came up prior to market opening, which started to send the market up in a very nice upward trajectory. We had a slightly red opening before starting to rocket up out the gates up to the 414 level. Had some slight retracement here, bounced off of a low volume push down, and wound up rocketing all the way back up to about the 416 level, rounding out and actually wound up having a nice push toward the end of the day, finishing just shy of about 416 at 415.93. Wound up getting a nice little push also after hours, breaking that 416 level and putting us into a situation where we're starting to get a little bit more of a bull market setup here, where I can see this potentially starting to hit the 420 to 430 range, and we'll take it from there. Taking a look at a couple of our indicators that we like to use here. Starting off, you can see early morning. This is the 5-minute chart. Again, we took several different calls throughout the day. Wind up starting off later on in the day on the 0 DTE calls. They were for 416. Wound up getting somewhere over 100% on those at the end of the day. But there were several opportunities to make money on the SPY, QQQs, and several other tickers throughout the market. But with the SPY, we're going to take a look and see how this played out. You can see, using this as an example for any options plays you may take in the future. Well, you can see we had the multiple crosses throughout the day, early in the morning. We have our 1348 cross. We had our 921 cross, all above the 200 moving average right around here. You can see the light pink line as well as the red line, which represents the 200 moving average, as well as the 200 exponential moving average, the EMA. Not to mention, we're also above the 5-minute 400 moving average, as well as all the other moving averages, which are very important in making decisions as far as calls or puts. In this situation, being above these major ones, we were in the call situation. So the smooth moving average I also have down here, which is the gray line, 800 moving average. Being above this area screams the idea for calls, which is exactly what we would have done in this situation if you were going to play the market today. So once we see here, we have our crosses early in the daytime. You can see we also have the Bollinger Bands, which are these light blue lines that play the outskirts of the entire move throughout the day. You can see that these crossed above, and they've respected the Bollinger Bands on the high at the top side, as well as on the bottom. All our EMAs are lined up and crossed. Early on in the morning, you can see that it played the top end of the Bollinger Bands, which basically put the market into a squeeze in the 5-minute time frame. I also have order blocks opened up here, which represent areas of liquidity, places where people are stepping in to buy up or sell downwards. The green boxes are going to represent these buy orders. Light blue boxes, if they're available, you can't really see them here in this case, but we'll look at them in other locations, would normally be blue, represent sell orders. Now, I also have my candles set up on JS Trends, which basically shows bullish momentum as blue candles, bearish momentum flips red. So it gives us an indication whether or not we're in a situation where continuation can happen, or we're going to look at the red candles for most likely sell-offs, which coincide with breaking underneath the 9 EMA, which again is one of the more important EMAs we pay attention to on trends going upward or back downward. A break of the 9 EMA represents a sell-off, and a riding of the 9 EMA to the upside represents continuation. As you can see, you basically continue to ride this thing up On the 9 EMA, this is on the 5-minute time frame, volume is steadily increasing above the white signal line, showing that volume is still picking up. We're above natural volume until it eventually starts to die off later on in the day below this moving average line you can see here. Now, it's a good indication in most cases where if you're playing up against the Bollinger Bands, it's a safe bet, generally speaking, to be in a situation where you want to short or apply puts in this case. So the market will tend to play puts on the top end of the Bollinger Bands and play call options on the bottom side of the Bollinger Band. And you can see how it respects the ins and outs of the Bollinger Bands. Now, there were several locations to be able to buy calls in this move that took place today on the SPY. Obviously, out the gate was one location. You can also have waited for the retest, which is what we typically try to do just to eliminate any kind of risk or poor entries. Again, with calls being the higher likelihood of success, simply waiting for entry somewhere down here in this area where the order block sat would have been a good location to purchase a call and then ride this trend all the way back up. This roughly took place at around 10 a.m. or 10:30 a.m., where a good entry would have been here. You could have played this all the way up, buying a call. Your volume profile, which is on the right-hand side here, would have showed you that you have a lot of buy and sell volume taking place at this red line, which was roughly at about 415. The best entry at that particular case would have been to enter a 415 call. You could have wrote it from 412.38, which is this entry point here, also sitting right on top of this order block, all the way throughout up to about the 415 level. Now, that would have given you roughly about 100% move if you had a 0 DTE call, but for safety, it would have been better off to play it a later date, most likely for Monday or the following day after that, just to be on the safe side. However, either way, you would have made several 100% or even anywhere between 50 to 100% on a later on this particular move from 412.30 all the way up to 415. All right, so continuing forward, you can see that there was a lot of struggling happening here at the top end. I'm going to remove this Bollinger Band setup so we can actually see it a little better. But there were several points where it struggled to break above 415.68. From there, you can see that there was a great opportunity to play to the short side at that point, being that you had a triple top setup, meaning that this is a real huge area of resistance that the SPY was basically having problems breaking over. So puts at this particular stage would have been to playing that back down to a level of support, which would have been created here at the early part of the day, where we bumped our heads originally. So that would have also been a nice move. So a second setup was available here on the SPY to play puts as well as calls, as we mentioned earlier. You can see toward the end of the day, we then created one of my favorite patterns, is the descending broadening wedge, which is basically a bullish reversal pattern that we see throughout the SPY. And it plays on multiple sides, almost also creating an inverse head and shoulders, represented by a left shoulder, a head, and a right shoulder, meaning that usually this is an indication that you're going to see more upside pressure, which is exactly what we got at the end of the day, breaking that 415.55 area and pushing us almost to 416 by close of day. Great opportunity to make a lot of money in two different occasions. I actually wound up picking up 0 DTE 416 calls roughly around the 414.50 area. Those went about 100% themselves, which is awesome plays. But again, there were several other ones we called out today. If you follow me on Twitter, you probably caught up wind of those. Make sure you follow me on Twitter. Make sure you're on there, keeping up to date with the things that I post, because there are huge opportunities to make some good money on some good plays. Link is down in the description. All right, taking a look here on the SPY going forward for the next couple of days. This is how I see it actually playing out. Being that we're now broken that major area of about 416, or above that 416. We've actually created a higher high on the weekly. It's a beautiful thing that we actually wound up closing around that 415.93 market. I can see that we're going to most likely move forward toward the higher levels. I can see us now that we break this major level of about 416. Looks like we got 416.10 after hours. I can actually see us moving forward toward the 420 mark, most likely this coming week. Now, we have FOMC coming up this coming week, so it's something to be aware of. It can make or break the market, either sending it up to that 420 range in full-fledged, or send us right back down to the 410 mark. So pay attention to what happens with the FOMC, being that could be the final defining factor of how things play out moving forward for the next couple of weeks, bullish or bearish. And I got the 1 hour chart pulled up here. Taking a look, you can see that we're actually now playing the huge reversal off of that 404 level that we mentioned the other day. SPY literally ran $12 upward to about the 416 level where we are now. You can see that we actually played out a huge cup and handle setup here, which is now taking form. The cup and handle is now heading toward this midline, which we have is also going to play out a larger inverse head and shoulder. If this plays through, I can see us touching at least this 420 to 422 mark within the next couple of days. It all comes down to FOMC, Q's levels there. If we do break that area, 430 is going to be without a problem. I could see us touching this yellow line I have here a few days later after that, possibly a week later after that at very most. So do pay attention to what happens with FOMC. That changes everything. And just taking one more look at it with the technical indicators to see where our targets lie. I have my bearish shark pattern showing up here. Our next major level of resistance is again at the 420 mark. I can see us running into a little bit of a problem somewhere around 417.93 as well as 423.32 if we do break that 420 level. So that it lines up very well with the TA that we have done a few minutes back. Volume, you can see, is starting to increase. It's starting to move above the signal line. Things are looking really, really good. You can see we have a slight decrease in volume at this particular point, a little bit of a lower high, I should say, on the volume side. So we got to keep a lookout on that. Obviously, I'm going to attribute this to slight fears that we have with FOMC, as well as the bears trying to continue to take control of the market to push it back down based upon the broader scheme of what's happening in the financial environment. But we'll continue to play the chart of what the chart is showing us. Right now, it's call central, so continue to play your bets and be safe out here. Continue to take your profits as we go along this journey. We're looking good so far. If you're not following me on Twitter, make sure you follow me for the updates. The description has the link for my Twitter page. I post a lot of high quality plays there, so go keep a lookout for it and hope to see you guys soon. All right, so that pretty much wraps up the video, and I want to know what you guys think. Leave your comments and questions down in the comment box below. And of course, if that button is still red, go ahead and click like, subscribe. Join us on the way up. We're going to be here every single day, growing our portfolios together and making the outcome income for 2023. Don't forget, leave your comments, like, subscribe, and we're going to see you on the next video.